Hello and welcome to BQ Prime. A very good afternoon to all the viewers. Railway counters have been in focus over the last couple of months, and the kind of returns that we've seen is also spectacular. One stock from the list that catches your eyes is the Titagarh Wagons on this fantastic Q4 numbers that have been reported. Umesh Chowdhary, VC and MD at Titagarh, joins in. Umesh, good afternoon and welcome to the show.
Hi, good afternoon.
Umesh, my first question coming to you is overall, with the Titagarh Wagons, we've seen that slow and steady growth that has come in. And now is the time where the next probably 3 to 4 years look fantastic, taking the order book into consideration as well. If you could help us understand in terms of the fourth quarter, what is it that worked and what were the things that you think the company needs to still work on?
Thank you very much. Yes, it has been a satisfying quarter. First things first, Titagarh Wagon is now officially called Titagarh Rail Systems Limited. We got the approval from the shareholders and then from the ROC for the change of name. And why this is more significant is because this kind of illustrates our strategy behind the company. We were a wagon manufacturer in the past. Now we are more into rail systems. And we've also restructured our business units into two business units. One is the freight rail systems and the second is the passenger rail systems. We've decided to merge the smaller units like the shipbuilding, bridges and defense into the freight rail system. And the whole organization structuring has been done accordingly. And this is primarily to kind of ride the wave and kind of capture the opportunity that has been presented by the growth story of India. The whole Make in India and Atmanirbhar Bharat Abhiyan of the Honorable Prime Minister has kind of opened up floodgates for companies like us, where sky is the limit in terms of opportunity that is available for companies. And it is entirely up to the companies how much they are able to capture the opportunity. And we have actually been the beneficiary of this kind of riding the wave or the tailwind, if you may say so. In terms of growth, yes, we've been able to kind of scale up our operations significantly. You see, if you look at 4 or 5 years ago, we were at a 300 crore revenue on an annualized basis. Last quarter has been almost close to 1,000 crore, 970 crore on a quarter basis, and the last year is at about 2,700 plus crores. So, and what is more kind of heartening for us is the order backlog. We today sit on an order backlog of almost 27,000 crores, which includes our portion of the consortiums under which we have bid for different tenders. And we see that the new announcements of the railways have been extremely proactive. The Prime Minister has been focusing on the railways, the railway minister and the entire ministry, the entire setup of the railways have kind of changed gears completely. And we believe that there is a lot of way forward in terms of the railway growth story is concerned. So yes, we are very bullish about the prospects in the coming years. And we do hope that the next 3, 4, but even more years are going to be good for the railway sector or the infrastructure sector as a whole. And we do believe and we do expect that Titagarh will be able to play its role and play its part in being a part of this growth journey.
Absolutely, Umesh. In fact, if I'm not mistaken, the company was also called Titagarh Steels. And that was back then, I think, when the company had just started operations. And now we have seen that journey move on as well. But overall, if you see from an order book perspective from here on, clearly we are looking at a consortium with BHEL to supply 80 trains to Vande Bharat. Apart from that, we have a contract with Ramkrishna Forgings as well. So if you have to break it up now into segments, what are the various segments that we are going to cater to, and what percentage of revenue is expected to come in from the various segments?
Two segments primarily, the freight rail systems and the passenger rail systems. In terms of the past revenue, which is the previous year, if you see that the bulk of the revenue came from the freight rail systems, out of 2,700 odd crores, only 500 crores or so came from the passenger rail systems, and the rest came from the freight rail systems. But going forward, we believe that both the businesses are going to be almost equal. In fact, passenger rail systems have the possibility and the potential of becoming slightly larger than even the freight rail systems. And in terms of order book, if I kind of consider the wheel project, which is going to be a greenfield project in consortium with Ramakrishna Forging, that is, if I take that as a part of the freight rail system, then our order book today is almost split half and half, and on an order of magnitude basis. So going forward, I believe both the segments have a large potential to grow. In terms of capacity build-up, we have already kind of reached a certain level of capacities in the freight rail systems. Of course, there is a further ramp up that we are planning during the year. But in terms of the passenger rail systems, the delta that we have to cover is quite significant. So we are at a much lower than planned level right now, because it's almost like a startup. This is the first year where we've crossed the 500 crore revenue in the passenger rail system business. We've got the Pune Metro order, which has been executed 50% till the last financial year. The balance will be done during the current one. We have the Bangalore Metro, which we are executing via CRRC. Then we've won the Vande Bharat. We have participated in other metro tenders. And then we keep on hearing the New Age India coming up with the New Age trains. So we read the news about the MRBC new trains, the Vande Metro. Then the new Vande Bharat possible trains that will come up. So we believe that there is a lot of opportunity in both the segments, but having been a dominant player, we are a leader in the freight wagon segment, but we still have to do a lot of catch up on the passenger rail systems business. So definitely the journey or the delta that we have to cover up in that would be much larger than the first one.
In terms of capacity expansion, the last I heard was from 8,400 to 12,000 units per year is what we were looking at in terms of wagons, and adding around 1,000 per month. Where do we stand in terms of capacity there right now?
So we are almost already at 8,400, which is 700 a month, and we will ramp it up during the course of this financial year to 1,000 per month. And the work is already on, and we are pretty much on track in order to do that.
Right. And in terms of coach manufacturing, by when do you think we will go to 850?
So, we started the coach plant with the capacity of just about 20 coaches which is 200 to 240 coaches a year. With the Bangalore Metro contract through CRRC coming our way, we decided to enhance it to about 36 coaches. Now with the Vande Bharat, we have already, while we were completing the first expansion, we've already taken up the second one, and we are looking at expanding it to about 70 coaches a month. We believe that in the next 2 to 3 years, we should be able to implement this capacity expansion and be at about 700 to 750 coaches a year capacity within the next 2 to 3 years.
Right. And in terms of this capacity expansion as well, how much is the capex do you think we are incurring? If you have to look at both wagons, you look at coaches, as well as the manufacturing capacity that will be, coming up in the next 2 years with regards to forged wheels?
So, in terms of the total capex that we had announced, including the capex that we have incurred in the last 2 or 3 years, is about 1,000 crores. Out of which in the last 2-3 years, we've already spent about 300. So another 600-700 crores of capex is going to be put in all of this, including the equity portion in the forged wheel project. In terms of financing the capex, we are still work in progress at this point of time. We are generating cash, so we will be utilizing our own cash. We are long-term debt-free, net debt-free, so we have the leverage to raise debt if required, or whatever is the kind of the funding mix is going to be kind of decided over the next few months. But we don't see that as a challenge considering the overall situation, and also I always like to say that the larger scenario that the country presents to us. So we are actually riding the wave that has been created by the government and by the country.
Absolutely, because clearly, if you see in terms of the passenger related business as well, we started with a mere contribution of around 0.5% to the revenues, and it's already moved to double digit to, I think, 20% so far this year, if I'm not mistaken. But with this, Umesh, help me understand. The role does not end with manufacturing alone for Titagarh, because from here on, the insurance with regards to maintenance is also there for the next 35 years, right? So, what kind of revenues are we expecting? Because that's something which is going to be recurring revenues for the company.
Yeah, so that's a very exciting business. That's this is the first time we've gotten into the maintenance part of it or the AMC part of it, and that gives us revenue visibility for a very long period of time, for 35 long years. And maintenance is a much more stable business, more it's challenging but also more rewarding. So the order book that I did mention is including our maintenance business part of it also. So as far as the way the railways are moving now is they are moving into the total life cycle cost of procurement, which includes maintenance of the asset for the life of the asset. So people like us, companies like Titagarh, are very happy about it, because then we have the responsibility from end to end, and we can actually, if required, spend more on the initial designing and manufacturing, the initial product, in order to be able to kind of save on the maintenance piece. So overall, this is going to be a very interesting part of the way this business is going to happen in the future.
Right. One another aspect I want to explore with you is in terms of dependence of the business in terms of the government, right? How much of it is government and how much of it is private? Because you do have larger players as well, from the private sector which use wagons, but that's a minuscule portion. Does that come in as a risk according to you?
No, because we don't see this as a risk. We see actually it as an opportunity, because you see, even if the private sector is buying wagons, the ultimate end user or the final customer is the government. It's under wagon investment scheme or whatever it might be. So we see that the ultimate railway, the wagons are going to run on the railway track itself, and railways have adopted different means and modes of procuring those wagons. Some of them they procure themselves. Some of them they encourage the public-private partnership mode, wherein the users buy the wagons. So, on the whole, I see the business on the basis of the, I was hearing a speech by the Honorable Railway Minister recently on the television, wherein he explained the return on investment to the country when investment is made into railway infrastructure. And it was quite an eye-opener, and this is the first time that the government, at the level of the ministers, at the level of the topmost decision makers, are actually figuring out the economics and the return on investments on infrastructure. So, and why I bring this into the conversation is because as long as the infrastructure return on investment remains high, which it is today, the investments are going to happen, whether they happen directly by the railways, by their own exchequer, or they happen under the private-public partnership mode. So when we calculate our business model, we would consider it on a combined basis as the total demand of the market. Some part of the demand is going to come from the railways directly, some part of it is going to come from the private sector.
Financials, right? From here on, taking the order book visibility that we have, what's the kind of growth that we're looking at, say, in terms of FY24 and 25? And number two, our margins have always been in single digits, though we've moved higher in higher single digits as well. Do you see that the way we have diversified, that could help us to move in lower double digit margins from here on?
So definitely, we always endeavor to improve our EBITDA margins, but I've always maintained that, our business is the typical business where the top line actually drives the bottom line. So it's not not a very high margin business. I would be happy with 8-10%. Of course, now we are doing a little more than 10% on a blended basis, but I would maintain that the margin of 8 to 10% is a sustainable margin. One quarter can be higher, some other quarter can be lower. in terms of the visibility and the future guidance, as a company, as a company policy, we don't give the future guidance. But all I can say is that we have grown from a 300 to a 2,700 crore company over the last 4-5 years. Last quarter being almost close to 1,000 crores. So definitely with the kind of tailwind, with the kind of wave that the Indian infrastructure and the Indian railways are presenting, the opportunities that exist, we would continue to endeavor to ride that wave in a significant and meaningful manner.
Right. So I think that's a good visibility that we're looking at as well. In fact, from a Titagarh steel to a Titagarh wagon and now to a Titagarh rail systems, Umesh. Thank you so much for joining us on the show, and congratulations and good luck for the coming quarters. Speak to you soon again.
My pleasure. Bye-bye.